Hi guys, thanks for tuning in to another episode of Nuggets News. Today we've got a very special guest, and that's Anthony Pompliano, or Pomp as he's affectionately known on Twitter. So how you going, mate?
I'm doing well, man. Thank you for having me.
Now, you guys have got more than $1 billion of assets under management at Morgan Creek, and do you want to talk about Morgan Creek digital assets and a bit about your background, how you got into crypto?
Yeah, my partner Jason Williams and I, we had an early stage venture fund. Was really focused on kind of non crypto investments. We started to see a bunch of the founders we were talking to start going into the blockchain space. Jason and I had also built a number of mining facilities. Started out building kind of traditional mining facilities. We eventually built what ends up being one of the first waste energy mining facilities. So take car tires, turn it into oil, steel, and power, sell the oil and steel, use the power to mine crypto. We basically said, look, after our first fund, we want to go and raise a second fund and go deploy it fully into blockchain and crypto space. And as we kind of started to do that, I think we realized there was a bigger opportunity, and so the two of us could go and we could raise a decent sized fund, but not kind of the seize the opportunity we saw. And so we ended up merging with Morgan Creek. Morgan Creek's a multi-billion-dollar asset manager based in the U.S. They historically have done fund of funds, hedge funds, ETFs, etc. The benefit to us is we get to come in and they've got a fairly large staff. They've got connections like a sales team, compliance, administration, etc. The founder, Mark Yusko. So Mark is kind of one of these well-known traditional finance guys. Previously ran UNC's endowment. They manage billions of dollars, and he's incredibly bullish on crypto. And so by kind of taking all of their legacy infrastructure and merging us in there, now we feel like we've got one of the larger, more sophisticated asset managers in the crypto space. And so we are kind of moving forward, trying to help these institutional investors come into the space.
So what was the hardest part of that? Is it sort of the legislation that you're still biggest headwind, or is it there's no shortage of people that want to invest in crypto and want that safe way and that trusted custodian?
Yeah, look, I think that part of this is there's a lot of people looking at price, right? And so as we sit here today, or up until yesterday, pretty much, there's
Yeah.
big drawdowns, right? There's 60, 70, 80% drawdowns from the beginning of the year. And so that just makes people uneasy, right? If you don't have long term conviction, you kind of look at what was the short term performance. It's not great. And so that scares people away. But I think that our approach is less about let's buy and sell these liquid tokens on the kind of open exchanges, and we're much more interested in buying equity, so early stage equity in companies, debt, real estate, infrastructure. I think there's all kinds of strategies that you can play without actually having to go and kind of trade those liquid currencies.
Yeah. So as you sort of touched on, then your focus is really going to be that world of digital securities and tokenization of assets. So what was the reason you went into that, and what's all the benefits of making things more liquid and so on?
Yeah. So look, when there's a new piece of technology, you can do one of two things. You can take that new piece of technology and you can apply it to build a new thing the world's never seen, or you can take that same piece of technology and go improve the old world, right? And so, we really felt like institutional investors are going to be most interested in applying that new technology to improving the old world, right? So if you think of an institutional investor, they kind of have pre-segmented pools of capital. So they've got an equity bucket, a credit bucket, a real estate bucket, etc. And so if you come to them and say, hey, you should buy Bitcoin, you've got an uphill battle in terms of being able to convince them of what is Bitcoin, why is it valuable, how do I buy it, how do I hold it, and how do I underwrite the risk, what's the price target. There's just a bunch of stuff there that's really, really hard for them to do because they don't understand the kind of core asset or the end goal asset. Instead, if I come to them and I say, hey, you should buy equity in companies at an early stage that are in this industry, right? Much easier. They understand, okay, this is what early stage venture capital looks like. I've got a pool of capital already allocated to that. I'll give you, some percentage of that capital to go do that. So it's a way to, really help them achieve their goals in terms of the capital pools they have, how do we help them get some of that exposed to blockchain? Doesn't have to be to the liquid currencies at first, but then over time, obviously, we hope that we begin to establish trust with them, right? And they really say, okay, look, you've done a great job with early stage venture. You've done a great job in the lending space. You've done a great job in the index space or in the real estate space, infrastructure, et cetera. What else should we be doing, right? And then that's when we really feel like, okay, now you can start to pitch them on Bitcoin or other liquid currencies.
It's so funny because it is so polarizing. In Australia, we've seen some big influencers that were calling Bitcoin a scam on Twitter. A few months later, now they're selling a newsletter. What is Bitcoin? What is Ethereum? So what do you see that as well? And what do you think it is that's so scary for these people from the traditional space that they just see Bitcoin as a scam, but then once they understand it, they're a bit more open to maybe blockchain in general?
Yeah, I think that there's three things, right? So one is they just don't understand. They just don't know, right? So they haven't spent the time, and so a lot of times, you hear about this thing. It's like kind of interesting. Most people will tell you like their first crypto stories. They heard it from somebody and they didn't really know what it was, and so they kind of just ignored it at first. I think that's what a lot of the traditional asset managers are experiencing right now. So, obviously the price run up last year that helped get people, a little bit more attention towards it. Two is a lot of the people who are talking right in this space are not exactly the people who traditional investors are used to paying attention to. Yeah. So I always give this joke about, crypto bully, whale panda, right? All these things. Imagine going into somebody who runs a multi-billion-dollar, pension plan and saying, hey, by the way, if you want to learn more about the industry, go on Twitter and follow, whale panda and crypto bully.
Yeah.
I love them, right? I personally think that they're great. But they're probably not exactly the people that the institutional investors are used to listening to. So it's scary to look at those as your source of information, right? Or go to Reddit, go to Telegram. These just aren't the traditional source of information. And the third piece is most of the things that people talk about in the space are things that they're not as interested in from an institutional perspective because they're starting at square one. So if we're talking about, what is the governance of Bitcoin, or what is the scalability of Ethereum? What's the price movements? What about token velocity? I mean, these are very kind of expert or intricate debates and theories. And so, if you don't even understand what Bitcoin is, there's no way you can participate in those conversations with any understanding or really any value added to the conversation. Yeah. And so I think that's, a piece of it is we got to get the right people talking to them. And then also we got to talk to them about the right types of things so that we can really engage them.
Yeah, I couldn't agree more. And we've seen that firsthand. People say, there's a guy called Nugget in Australia and he does fundamental analysis, and people just laugh us out of the room. So legislation, I know you obviously keep your finger on the pulse and you've had sort of talks with the SEC and that sort of thing. So how's that all unfolding and what's the future look like sort of short term? I know a lot of people are waiting on that ETF, and I actually think there's a few more boxes to tick. We're not going to get that anytime soon. So what's your thoughts on all that?
Yeah, look, I think there's a couple of things. So one is let's separate the known from the unknown, right? Digital securities, what's so attractive about them, or tokenized securities? It's that we know the rules, right? So the sandbox has been drawn. We know if you do a Reg D filing in the United States, here's exactly the rules you got to play by, right? So there's a whole world of this that are more traditional assets. They're not going to have the 10, 15, 20x run. They're not, kind of revolutionary in the way that Bitcoin is on the global markets. But the rules are understood, and so there's less uncertainty, which actually is more attractive to the institutional investor, right? Less risk. On the other side, there are certain assets or ways to participate in the market that have incredible uncertainty, right? But they're also incredible risk-reward profiles, and they're incredibly disruptive to global markets, right? And so I think we've got a lot of clarity now on Bitcoin and Ethereum in terms of, are they securities, are they not securities? There's still a lot of questions, though, right? I think about things I always go to is, here's a practical example. If I fly into the United States from outside the United States, I get asked, are you carrying more than $10,000 on you? Yeah. Well, what if I have a ledger with me? All of a sudden, do I have to declare that? Do I not? What if I'm carrying my private key in my head? I've memorized it. Am I carrying the money? Am I not? Right? There's all these intricacies that, again, I think that step one is let's get the rules established. So if somebody says this is the rule. And then step two is always somebody's going to have to go to court and fight it out, and then legal precedent will be set, right? And so there's a lot of things that are practical in nature that just I've got no clue what the answer is, and it's above my pay grade, right? And so I think that the institutional investors are seeing that as well.
Yeah, I mean that'd be a great core case. You've got your private key in your head or on a ledger. You don't technically have any bitcoins. They're on a blockchain. How that plays out would be very fascinating. But you mentioned it then, Bitcoin and Ethereum. Are you the sort of guy that really values decentralization, and you think that markets are going to start to realize the importance of that more moving forward, or do you have a few other projects that you're really interested in?
Yeah, so I think the mantra of decentralization for the sake of decentralization is probably not the best one. What I mean by that is, what are the benefits of decentralization, right? If you look at Bitcoin, for example, right, so you've got a governance capability that you're allowed to or able to move that central third party, that trusted party, out, and you're still able to reach consensus, right? So that's a really interesting end result. Decentralization is what gets you there. But you're not just decentralizing for the sake of decentralizing. You're doing it because you've got a better way of reaching consensus without the kind of single point of failure of a centralized party, right? If you look at transparency, right? Again, having that decentralization, you're just spreading out the ability for the power of the crowd to take over. But what you're doing is, again, you're not just doing it because, oh, that's the new hot, cool thing to do, right? It's kind of like the use of like artificial intelligence. I get pitched all the time these companies who say they have artificial intelligence, and I always say, what is artificial about anything intelligent that you're doing, right? And they all kind of look at me like this, that's a weird question, whatever. I say, I'm saying that because there is no artificial intelligence going on here. What you're doing is you're using data and you're using algorithms, but it's not true artificial intelligence. And so I think we've got to be careful about describing a lot of, everything in crypto is decentralized. Most of it's not, and also the goal isn't to decentralize. The goal is to drive the benefits of decentralization, and we're just using that as the means to the end.
Yeah, so we've got to look for those industries that actually need it, and money is actually a very good use case.
It's one of the best.
So we'll wrap up, mate. Any final thoughts? I know price predictions, nobody likes to give them. We've sort of been telling people, look, maybe one more leg down, but we're not too fast long term. We're just so bullish. We think this is a reasonable entry point. Any sort of thoughts on that? And I know you've been using that buzzword that the virus is spreading, and we've sort of started to say, look, the race is on. Look at all these custodial services that are just racing and competing for fees and everything. How bullish are you to finish on?
Yeah, so I'm actually surprised that when we talk to the institutional investors, how much I get asked about Bitcoin and price, right? And so they sit and they listen, and they're like, oh, this is great, whatever. And then it's almost like they take their institutional investor hat off, and then they kind of, as we're walking out the door, say, hey, psst, by the way, how high do you think Bitcoin's going, right? And it's more of like a personal question.
Yeah.
So back in, I think it was December or January, I said $50,000. I've, kind of consistently said, I think that's the number. I said, I could see that happening by the end of this year. And really, the way that I look at it is every time that Bitcoin has gone on these parabolic runs, there's a drawdown, and the low or the floor is always higher than the last floor, right? Or near that last high. And so what you end up getting is a decentralized and kind of capped supply type protocol that is working. This is what it is supposed to do. Yeah. And so in my eyes, what I think is really interesting is, will we hit 50,000? No doubt in my mind. The bigger question, and so we make a prediction, is not only what's going to happen, it's when is it going to happen. Yeah. And so I think that the timing is the harder part of this thing. I do think that the next kind of parabolic run will hit that 50K. It's just, is that going to take, the last 4, 5, 6 months of this year? Is it going to take the next 12 months? That's the harder part to kind of gauge. But 50,000, I think, is well within sight, and I would be shocked if we never get there.
I couldn't agree more. That's actually been my number as well. So I think that's a great place to finish on, mate. Appreciate everything you do. How can people follow your work more?
Just follow me on Twitter, at Pompliano on Twitter. I am over there making too much noise, and just excited to be learning alongside everybody else.
Awesome, mate. Thanks so much for joining us today.
Absolutely. Talk to you soon.
Cheers.